Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Let's try and maybe not make these like 30, 40 minutes. I don't know why on earth I keep talking so much to you guys. It's supposed to be a summary video. The old man just has a hard time shutting up sometimes, though, eh? Long and short of it here, we're in a pretty tough market state. I think everybody knows that. Sometimes you actually have to play good defense, not aggressive offense. And you just have to remember, there'll be good days, there'll be bull markets. You can bang out doubles really quickly, no problem. But during these kind of environments, it's like, okay, capital preservation, let's cool our jets. I'm not buying any new stocks right now. I did get filled on a stink bid yesterday. It seems like the level's hanging in, but at the same time, too, I have been liquidating ideas that just can't hold their lows. And I'm okay with it. I mean, I don't like it, but I am okay with just simply saying, look at he who fights and runs away lives to fight another day. And this is not a friendly market right now. That's absolutely for certain. For the free YouTube video, I just like to keep the conversation relatively centered around what's the big hegemony product proxy doing. And interestingly enough, we used to follow on a religious basis gaps that were left on the price charts as reference points. And gee whiz, you notice they actually have left a cheeky little gap on the US dollar index right up top there. So, my hunch is we definitely have upside resistance levels identified. Have we actually bottomed on the US dollar index itself? The bottom, way too early to call that. But I have been talking to you guys about how I'm really interested in getting a euro short position on. So I will be watching and talking and following, and if a trade setup does come in, I really do want to get something established there. We had watched a week or so ago about maybe a potential top against these highs. That clearly is off the table now. See you later. Boom. And now I have to, in fact, actually, it's interesting. Is that a daily? Oh, it's a 4-hour chart. Interesting double top that has actually come in here now. So, kind of seeing the V bottom in the US dollar. I can start understanding a top. Now, this was a new closing high, so on this 4-hour chart. Maybe if we can get a little bit more structure, but I might even think about taking a look at the put options. Maybe I'll do that through the rest of today and just see if the numbers align. But I'm still just a little bit early on things like the daily charts, getting too excited about strapping on a position here. There is that euro chart on the dailies. Looking very, look at that. So we rallied up to a higher time frame, 38.2, ran into trendline resistance, and bang! So, off the dailies, if I can get just a nice little consolidation, a nice little M, then I'm definitely going to start thinking about shopping for those puts. But as it stands right now, V bottom, V top, just going to let this thing settle down a little bit before I start actually risking some money in the marketplace. With regard to the stock market, and actually I put out maybe the US dollar index and that euro short also aligns with this. But I put out tweets to the effect yesterday that I think I see the next sort of stock market trade coming up, but it's going to take a while to develop here. So I do believe that we have AB equals CDs. I don't think we have a choice. We're going to have to trade down to this like 22,000 area on the Dow. And on that PRZ, potential reversal zone, we'll start hunting for divergences and 2 W's in our RSIs and all those kind of conversations. Then some sort of structure. And not only do I think the market's going to pivot that first week of April because of things like celestial events, but actually if you look at the put open interest data on the indexes, but this is an interesting conversation I'm having with our advanced students right now. I've sort of alluded to it in the private or in the public broadcast. But we can actually see exactly where the institutions have established floors. And interestingly enough, this is a fear index. And when it goes up, it means everybody's freaking out and option premiums are going zooming higher. And you can see they have a vested interest to make damn sure that this VIX index does not calm down anytime soon. And interesting too, you can see they're not on the hook on the call side if they keep the VIX index all freaked out. So you can clearly see this is April 1st. This is sort of what I've been alluding to, where VIX data itself is actually telling us where to expect pivots and why the 1% is going to keep the public all freaked out and coronavirus. And gee whiz, why is it we're not hearing anything about plunge protection teams and all that kind of stuff? Why? Well, because the 1%, the guy who's running U.S. Treasury, I mean, look at his history. You know what's interesting is look at the history of who has been the Secretary of Treasury and what their past has been. I mean, every single U.S. Secretary of Treasury comes directly from Goldman Sachs. Who's driving the fucking bus here? I mean, it's pretty obvious who's driving the bus, and this is the kind of data that, what do you think? You think Goldman Sachs wrote a few of those put options? You tell me. Anyway, so the point of the matter here is I think the market itself is being incredibly finessed, and the public's just getting played, which really bums me out, but it is what it is. I'm still looking for further downside in the stock market, like I just told you. What I found really interesting about the crude market, of course, we were looking for big AB equals CDs, and on the loss of these lows, I was like, I got to get out of here. Get out, get me out. But to be honest with you, I wasn't expecting them to do it in one day. Bang! So I'm wondering now, because now that they've hit these objectives, they've basically marked the market down. Now, this, ironically enough, the crude oil's actually got some room to do dead cat bounces and stuff like that, which worries me for the gold bugs. And you can see just on this chart here, we are actually painting a potential empire top here on the gold, which could be pretty nasty. I mean, given the volatility of the market, should it surprise us if we see gold down $200 an ounce here at any given point in time? Be careful here, people. And also, too, we're finally starting to see some signs of exhaustion out of the bonds. Maybe an inside bar. Way too early to call a top. But at least, finally, they're calming down a little bit here. So, here we are, 10th of March. We know Ides of March is 1 week from now. We know that there's vested interest to keep the market all freaked out through the end of the month, and we know that there's a big celestial event first week of April. And if you don't take celestial events seriously, do yourself a favor and go look, Google it, whatever. What did J.P. Morgan, Mr. Wall Street himself, say about astrology? I think that's an excellent historical reference for you. I don't really have anything new to talk about in the stock market. Like I said, I did pick up a bit of this HUT because it filled in a gap that I've been waiting for forever. But there are names in crypto and in the stock market I do not like right now, like Mr. Novogratz. I thought Mr. Novogratz had a pretty good shot at bottoming here, but they've just completely puked out here. So I had to walk away from this thing. And that's the kind of market it is. If these things lose these lows, I'm not married to them. Trade them, don't date them. If this thing craps out through, if HUT craps out through these lows, I'll just, I pick some up here. My average is in this area. I'll just walk away if this shit craps out. And it's that kind of market. I had to blow out 3 or 4 positions today just because they all lost their lows, and I'm not married to any of this stuff. It's a trader's life. Get used to it. Heading over to the corn in particular, I really like something like crypto right now where, in the broader market, unicorns, they're all falling apart. What's value? How do you actually define value? And the interesting thing about crypto is, especially POW, if it's below the cost of production, I would consider that value. Is the cost of production here on Bitcoin around $7,800 right now? I don't know. That's a tough one. I don't think so, but nonetheless, there are some people on the net that do believe so. We are pointing down, and given the way the broader market's acting, I'm not really looking for a huge rally anytime soon. I do like the idea that we did a Wyckoff check here, basically came down, checked the double bottom. We are in reload zones, we're at the POC, but there's a couple problems here. The first, of course, is that there are no W's here in place at all just yet. And I'm very bothered by this massive hole in the profile just below us here. Usually Hogue says that, if we trade back into value, and of course this is moving, so it's not exactly, fixed, but if we trade back into value, which is this, 80% of the time we should trade back down to value low. Was this enough of a trade back down to value low to sort of satisfy that? I don't know. I had sort of said, I put a tweet out yesterday, fingers crossed, fingers crossed, fingers crossed, if we can come down into reload zone. You remember I made reference after that auction. If we could just dump straight after that auction on no sort of Bitcoin negative news, which is exactly what's happening. This is all about celestial planets. This is all about, flu viruses and panic and fear. It really has nothing to do with Bitcoin itself. That's exactly the scenario you want, right? But the key here, we now need to see this thing actually W out and turn. So, we've got location. Do we have signs of divergence? Potential divergence. Remember, it's super important to understand the difference between potential and confirmed. But that's as far as we can take the story. Soon as divergence is confirmed and we are still in respectable trade location, and then we get like W's or empires or fractals or triangles or any of the kind of head and shoulders come in here, then we can start getting super bull. But just like the broader market looking into the end of the month, I don't see any reason to call a bottom here right now. We just got to be patient. And the poop index, poop coins, all that kind of stuff, they broke the recent lows here on this highly leveraged product. We're basically trading right back down at the bottom end of the range. There is no buy signals here. If anything, maybe if we're really lucky, we form some sort of little empire fractal here to set some sort of new base. But you can see the buying interest is very low here right now. For whatever it's worth, and basically what I told site members, of course, is you notice that most of these things, they're just bumping along. It's not like, oh my God, they're collapsing, 80% fall. No, if anything, what's happening is they're sort of bumping along. They have little spikes up, and if you're lucky, you can get a double off, and then they just seem to just melt right back down to the bottom end of the range. So if you can sneak in and try and grab some of these names at or near the bottom end of the range, I think it's a good idea. And also, too, as I said before, broader market, what the hell's value? I have no idea. At least in this space, especially if it's like POW coin, you can actually start saying, what is the value of one of these things? What is the cost of production? Hey, I can actually buy below what miners are actually mining these coins at. That is a perfect scenario. So, the only name on this list that I'm actually even considering about actually buying and adding to the portfolio is my crazy little mana. And, of course, I just have to sit and wait. And that's been the message for me on the market for a while is, I have to wait for levels and just hurry up and do nothing. It sucks, but, it is a trader's life. There's your report for today. I will say, TRI site members, oh my goodness, did they ever get a treat today in the daily brief. Wow. Two TRI OGers from the UK, Raf and Bobo. And it's so cool because we have like these little satellites of TRIers around the world. I went and did a tour of Europe a couple of years ago, and actually Bobo and Raf both put me up at their places. It was such a wonderful, wonderful memories. If I'm not mistaken, I think they're actually planning another get-together here for the Halvening in the UK, so there'll be a group of them all coming together there. If you happen to be in the UK and you'd like to crash that party, they're going to be wearing masks of me and making fun of me, in posterity, of course. Maybe reach out if you want to put a comment on the video page or whatever. Hey, I'm in the UK. I wouldn't mind coming and having a beer with the TRI folk. Just let me know. And I think Jamie actually is quarterbacking that. He's got like a little group meetup document and stuff and all that. But anyway, point of the matter here is Raf and Bobo did a presentation today where they took my little 4.669 level tool analysis to the next level. They did some beautiful work with validating extension levels. understanding the chaos model. Gave some great outside links to understand chaos theory a little bit better. And then direct application of the concept to identify levels. They've also identified another level, 8.77, which I'm going to have to start sort of incorporating into my thinking. So, maybe watch for that down the road. But absolutely fantastic presentation. If you are a TRI member and you're watching this later on, we'll post the video tutorial walkthrough on the site in the Daily Brief video library, and also there's a PowerPoint presentation and a PDF document that's there as well. So be sure to watch out for that. And I got to tell you, Jesus. After they did their presentation, I told both of them that you could have easily gone and done this presentation at any institutional trading desk, and they would have paid you thousands of dollars for this presentation. Both of these gentlemen could easily create a business out of just what the work that they did today. And for the ridiculously low price that we charge for this site membership, that's a year's subscription right there, just understanding the work that they did. And that's all about TRI environment. These guys are OGers. They didn't ask for any money from this. They wanted to share with the community because they were like, wow, look at all this cool stuff, all this validation that we found. Can we share this with the community? I'm like, yeah, right on, man. So 1 + 1 = 3. I was so proud and so pleased with the Bobo and Raf's work. And all you UKers, work. I'm still thinking about you and your buddy Flick. I think about you guys all the time. All right, I think I'm going to leave the rant at that for today. Like I said, because of market state, there isn't a hell of a lot new for me to talk about trade-wise. I'm just cooling my jets, and frankly speaking, that's not such a bad idea for all of you too. All right, guys, have yourselves a great day. Try and play from a position of strength. Please understand, sometimes the market just tells you, don't do anything. Sit on your hands. And right now, for a guy like me, it's definitely a sit on my hands kind of moment. All right, guys, all the best, and bye for now.